Right.
Definitely, it's now recording. It's now recording. Thank you so much. Thank you so much. Thank you so much. Okay. Um, going to start now with the questions. Hope you're.
I've got a lovely big mug of coffee, a bucket of coffee for our conversation. How's that?
I love it. Okay, Nerina, can you take us back to your early days? What drew you into finance and investments? Just take us back to your early childhood, who you are
Mhm.
basically. Who's Nerina Visser from the first person who wants to actually know this awesome human being.
Good morning, and thank you so much for this opportunity, Langihle. I really look forward to our conversation. My roots go back to what is now Gauteng. Back in the day, it was Transvaal. I was born and grew up in an area just between Pretoria and Johannesburg, nowadays known as Centurion. And I was born into a family of women. I am the youngest of six daughters. My mother only has sisters. My father only had a sister. I only have daughters. We all went to all girls schools. So certainly, I think one of the key things that shaped who I am and how I sort of approach life comes from very much not just a female dominant environment, but I think a very strong female environment, but supported with very kind, generous, intelligent, capable, competent men. I must just add that as well, because I think the men in my life have been as supportive as the women have been in my life. But I think what's key for me is the fact that I grew up in an environment where gender limits did not exist. I never felt as though there were things that I couldn't do or wasn't allowed to do because I'm a woman. And I think that's it's a wonderful privilege. It's a blessed position to be in, but I think certainly one that shaped where I come from and is certainly the industry in which I find myself today. The other key sort of feature of my childhood was one of a very strong focus on education. Both of my grandfathers were school principals, and I have in my extended family many teachers, lecturers, university. My one daughter is even a university professor. And we have in our family a very strong desire to educate, to teach people, to help people improve themselves through education. And I think that's the other cornerstone of what my life has become, what's it built on. My life into finance and investments, I guess I would be what you can call a late starter, because I only joined this industry in my 30s. I did not grow up with a finance background, or certainly didn't. I didn't do subjects like accounting and economics at school. I didn't study a BCom. I didn't study investment management. None of that. My background was maths and stats. I came very much from a mathematical perspective, and spent several years working before, at the age of 30, it was really my husband that I think knew me probably better than I know myself, who saw a job advertised for a quantitative analyst at Old Mutual Asset Managers, as it was at the time. Now, I could not even pronounce the word quantitative. I can nowadays, but those days I had absolutely no idea what this was all about. And I said to my husband, what are you on? I know nothing about this field. I know nothing about finance. I know nothing about investment. What makes you think that this is something that I would be good at or that I would enjoy? And kudos to the person who drew up that job spec, because my husband said to me, look at how they define sort of the characteristics, the sort of person that they're looking for. He said, that's you. And I looked and I saw it spoke about things like the attention to detail, certainly the maths and the stats as a background, but the attention to detail, problem solving, financial, oh, no, sorry, not financial modeling, just modeling. I had done computer science, IT, and so on, and I was quite good at building computer models and so on. And yes, within that description, my husband recognized me. I saw what he saw. And yes, I started working for them 30 years ago, just over 30 years ago. And I must admit, it was love at first sight. I got into this finance and investment industry, and I just thought, oh my goodness, where have you been all my life? So, yes, certainly loved it from the word go.
Obviously, I want to touch on ETFs and ETNs for the average South African who wants to comprehend the ideologies, and the
Mm,
concepts of ETFs.
mm,
What is the simplest way to describe an ETF and why does it matter?
yeah. So I think I will describe it from two perspectives. The one is let's just describe it from an ordinary person's experience perspective. I would equate that to buying a hamper or a bag of goodies or a box of chocolates, or what it really represents is a single package deal that you get with a whole lot of different things inside it. And just like when you think in terms of the hampers that you're going to buy at the grocery store, as we go through the year, there are different themes. You can get a Christmas hamper, or you can get a back to school hamper, or there might even be the Valentine's Day hampers that you might get, or Mother's Day hampers. And just like each hamper of goodies that you can buy has got a different theme sort of associated with it, which gives you some sort of idea of the type of things that you get inside that hamper. So the same applies to an ETF or an ETN. It's a single investment that you make that with one transaction gives you access to and exposure to a whole range of different investments. From a financial and investment perspective, the best way for me to describe an ETF is that it is a listed index tracking collective investment scheme. So I'm just going to pause on each of those three major components. The listed part really, it sits in the name of exchange traded fund. So listed means that the units that you buy in this fund sits on the stock exchange. You buy it on the stock exchange just like you would shares in ordinary companies as well. The majority of ETFs are also what we would call index tracking. Now, there's a colloquial term that is often used that is refers to it as passive investing. I particularly don't like the term passive because it sort of evokes the emotions of nobody does nothing, and that is not true. Index tracking for me is a better description of what we're talking about. And index tracking, the principle of index tracking really is that you think of it as a recipe. You follow a recipe which specifies for you what are the ingredients and what are the quantities that you would be using in your recipe. And an index tracking product does exactly the same. The index tells you what shares and how many of each makes up the index. And when you have a portfolio that tracks that index, it buys the same shares in the same quantities or the same proportions as the index, and that tracks the index. The third aspect, collective investment scheme, that is the sort of the big formal name for what many people might be more familiar with in terms of unit trusts. So unit trust is probably one of the best regulated and best protected investment vehicles that one can get in South Africa. And that really talks about pooling the assets of a whole lot of investors to give you a bigger sort of economies of scale of being able to invest according to a very particular strategy, but on behalf of a whole lot of investors. Very, very well regulated. So, why this combination of the exchange traded or the listed aspect of these unit trusts is, I think, so great for ordinary South Africans is that you're really talking here about, on the one hand, the best regulated, safest, and sort of best protected investment that you can get in South Africa. And at the same time, it gives you that benefit of diversification, a whole lot of assets in a single investment. And those are, for me, just some of the key reasons, really, why I see ETFs really as the most beneficial and most important first investment that anybody should consider.
You see guys like Ali, Ali, Uhuru, the former president of Kenya,
Mm-hmm.
and Ali, the former president of Azerbaijan, right?
Mm-hmm.
Because of this documentary called "Why the Poor Countries Remain Poor," right?
Mm-hmm.
And it explains this concept of PEPs, politically exposed persons, right?
Mm-hmm.
Whereby um, PEPs, is someone who holds a public function, but um, he's in a higher risk of being involved in bribery or corruption, etc.
Mm-hmm.
These guys you find like Ali, they own everything, etc. And I'm trying to get into this concept of investment, right?
Mm-hmm.
Almost all guys I speak to, they say like they don't invest in South Africa. Do you think South Africa is a high risk market to invest in? Because almost all these guys, Ali, Uhuru, all these elites, I don't know if I should call them entrepreneurs.
Mm-hmm.
They almost all of them they invest UK outside the province, outside of their own hometown.
Mm.
And I want to ask, do you find South Africa at this moment a high risk market, or should South Africans invest locally or globally in your own perspective of all the knowledge and acumen you have in terms of
Mm.
investments?
Mm. So I think there's a couple of angles to that. Let's maybe start with the idea of a high risk market. So, high risk can be perceived from two perspectives. The one could be that there's the risk that you will lose your money completely because of corruption, because of bribery, because of companies not being run well, and even the directors being involved in fraudulent activities, and the company goes bankrupt or they lose a lot of value. And we certainly have had several examples of that in South Africa. Some of the more recent ones that come to mind is the like of Steinhoff, there's Tongaat, there's a long list of companies that we can mention. But it's not unique to South Africa. It's certainly also not unique to Africa. If you look at well-developed markets such as the US and you think of scandals such as Enron, that's just a big one that comes to mind. And again, it's just one of many. We've had Ponzi schemes by the likes of Bernie Madoff. We've had, Sam Feinberg with these crypto-related scams and so on. So there's evidence of bribery and corruption and the risk, therefore, of losing all your money in an investment around the world. So the risk of losing everything needs to be mitigated by not that classic saying of not putting all your eggs in one basket. And what that really would mean is that you want to make sure that your investments is diversified, that it is spread across many different companies, many different even asset classes, and certainly many different countries or geographies as well. So, the second type of risk that is associated with that also is the variability or the volatility of the price of the investment. And people often associate the fact that a price of an investment can go up and down a lot as risk. But it is actually exactly that going up and down a lot that allows that asset to grow over the longer term and to grow faster than inflation, because that's how you get wealthy. You don't get wealthy by having money in a bank where you only earn interest and where the capital value, the 100 Rand that you put into the bank, yes, it remains 100 Rand. You know, if I come back tomorrow or next week or next year, my 100 Rand is still there. But the purchasing power of that 100 Rand next year is not the same as it was today. So the inflation impact on the purchasing power of your money is a very, very high risk. And therefore, we need to embrace and take on this perceived risk of prices of investments going up and down. We need to embrace that in order to counteract the very real risk of inflation eroding the purchasing power of your money. And when we then look at diversification, I now want to come back to your question about local or global. Should you invest in South Africa? Should you invest abroad? And my simple answer there is that you should be investing in the entire world. South Africa represents less than 0.5% of the investable universe that's available globally. So to put all of your money, all of your investments into a market such as South Africa, which is relatively small, would really be a form of putting all your eggs in one basket. So you definitely want to diversify beyond South Africa as well. But having said that, we have the evidence that not just over 1 year or 10 years or 100 years, the returns that one has achieved on overall investments in South Africa have been exceptional and, in fact, have been better than performance of investments in even the US. So I want to caution people not to look at the state of the country around them, which, let's be fair, for many people that can be quite depressing. It feels to you as though so much is wrong in our country, so much is just not going the way that we want it to go. But that does not mean that there are not good investment opportunities and that can still give you good returns on your investment. So for me, the focus always is on why do I invest? I invest ultimately to grow my capital, and growing of my capital is best done everywhere in the world, including South Africa. But when I look at the ultimate aim of my investments, which is to create a pool of assets, an investment portfolio that can give me the income that I need to live off. Think of the fruit that is borne by an apple tree. The tree is my investment assets. The apples that I get from that tree is the fruit. And that fruit that I want to get, the income that I want to earn from my investments. If my expenses are in South Africa, my living expenses, I need to get that income also in South Africa. So it is very dangerous to put all of your investments only in global markets and nothing in South Africa. So good balance between local investments and global investments for me really is the best way to deal with the multitude of different risks that we do have in investments.
In your past interview you had on Chartered Financial Analyst Institute, you
Mhm.
mentioned problems like related to retail and professional investments. And you mentioned that there's a misconception there with, because people rely too much on past performances, like
Mm.
forex trading. People look at the charts and think you're gonna make that because they look at the trading view and stuff, and they think everyone's gonna be. Because I always tell people this thing is a scam. In my own viewpoint, it's a scam because I don't want to talk about insider trading, but I want to mention this cool this guy, I saw one of his stories called Ray Dalio,
Mm-hmm.
a US billionaire. So this guy, what he did was he shot satellites up into space to check out the containers, to look at the containers with crude oil because he wanted to invest with his own position in terms of um, checking the oil reserves because the, 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 the lead, the container was not a sealed lead, right? So when you check out the oil reserve, use the imagery of the satellites to check if this was going up or down.
Mm-hmm.
And in accordance to that information, he made investments, he traded according to that to that information he had, compared to you, who's going to be using all that past information and stuff, looking at all the charts, and you make one mistake and you're dead gone in terms of your investment portfolio and stuff like that. And I want to get into this concepts or this recent debacle. Um, there was an implementation of the US like tariffs on SA, right? Talking about um, South Africa's exports and the resulting volatility in the markets, etc. Oh, I want to ask, how do you assess the value of the rand in the near future in terms of the global inflationary pressures that we are currently going to be experiencing? And do you also think that we are on a good spot in terms of now we are also going to be producing our own goods and services in terms of telecommunications? We're going to start creating our own things in terms of only depending on the other countries.
Mm-hmm. Yeah. So, in terms of the first question that you're asking, in terms of the value of the rand, I think the first sort of thing that I want to mention there is that it is never just the rand on its own. It's always the rand relative to another currency. So we might talk about the rand dollar or the rand pound or the rand pula relative to the Botswana currency. So the rand on its own is really the it's almost like the share price of the country. But how it gets measured is relative to another currency. And so when we look at the performance of the rand over time, we need to look beyond just what the rand has done relative to the dollar. Now, why do currencies fluctuate and especially depreciate over the longer term, as we've experienced with the rand against most developed market currencies? Well, the first reason why currencies depreciate is because of interest rate and inflation rate differentials. When you look at the history of where we've come from in terms of what the inflation rate in South Africa has been relative to that of the US or to Europe or to the UK, our developed market trading partners, our inflation rate used to be quite a bit higher than those markets. Similarly, also, our interest rates were a lot higher. But when we look at where we find ourselves today, there's actually very little difference between the inflation rate of South Africa compared to the US. You know, our latest readings, we were sitting below 3%, and the most recent reading came out at 3.5%, whereas the US is sitting at 2.8%. There's really not that much of a difference. And when your inflation rates are so similar, the rate of depreciation of the currency suddenly looks very different. The second thing we need to consider in terms of this also is that The dollar as a currency over the last couple of months have been weakening from a very, very strong level that it enjoyed for many years. And there's lots of reasons that we can go into in terms of why the dollar has been so strong. Certainly the fact that it's been the reserve currency of the world and that the majority of trade in the world is dollar denominated, that has been one of the reasons. But when we look back over the last year, the dollar has depreciated by around 20%. Now, if nothing changed with the rand, that means that the rand supposedly strengthened by 20% against the dollar. Not because of anything that the rand did or anything that we did in South Africa or didn't do, but because of what happened in the dollar. So we need to be very careful when we think in terms of the rand, and especially the rand relative to the dollar, that this is only about South Africa or it's only about what we do in our local market. But bringing it then forward to the state of play in terms of global trade, in terms of tariffs in particular, we know that what President Trump is doing around the tariffs that he's applying globally not only is unprecedented for more than 100 years, but it's also, there's no real economic basis to what he's doing. He's using tariffs really as a political weapon to try and get countries to do the things that he wants them to do. We've certainly seen that evidence in many different markets, and I think if I look at some of our African markets, and certainly here in the SADC region around us, you even see him using it as a tool to convince some of the African countries to accept refugees to be deported from America to these African countries. It's got nothing to do with economics, and it's got everything to do with these political tools. So to try and fight it from an economic perspective can't work, because that's not the reason why he implemented those tariffs in the first place. The good that is coming out of this for me is that it is forcing South Africa and just about every other country in the world to look beyond the US as its major trading partner or a major trading partner and say, but surely there are other markets and other trade partners also. And in South Africa, I think we find ourselves in a very strong position as far as that is concerned, that we already have significant trade relationships with China and Asia. We have significant trade relationships with Europe. And then my belief that one of the biggest opportunities that we have is our trade relationships with the rest of Africa. It represents about a quarter of the trade in South Africa already. And under the African Continental Free Trade Agreement, there are significant opportunities for African countries overall to trade a lot more with one another before they even think about trading with any other countries in the world. And if you think then, bringing it back to the conversation, back to the impact that it has on the currencies, if you were to look at the rand relative to the dollar and the pula relative to the dollar and the Nigerian naira relative to the dollar and the Kenyan shilling relative to the dollar, all of those are more affected by what happens in the dollar than it is affected by what happens in each of those African countries in our own currencies. And so when you look at the variability or the movement of the rand against the pula, or the rand against the naira, or the rand against the shilling, you see that there is a lot less volatility and depreciation, and just shows you the resilience and the benefit that we as African countries and African economies can have by doing a lot more inside the continent, long before we focus on the rest of the world. Africa has a long history of exporting raw materials to the rest of the world. You see it by just looking at the rail system in Africa. The old colonial railway system is all about transporting goods from the mines to the ports to export them to the rest of the world. And then we import finished goods back into Africa at hugely elevated prices compared to what we received for our commodities when we exported it. So, as much as we can focus on doing a lot more of the manufacturing, a lot more of the beneficiation, a lot more of the value add in this production chain, if we can do a lot more of that inside Africa rather than always exporting it to the rest of the world and then importing the finished goods again, I think African economies will finally start realizing that incredible potential that we have as a continent. But to do that, we need to work together as a continent, and certainly for starters, as a sub-region, like we're doing within the SADC region, for example, or as they're doing in East Africa and as they're doing in West Africa. We cannot do this as individual unilateral countries on our own because no country has got everything that we need for a good economy. We need imports and exports with other countries. But within the continent, within Africa, we've got everything that we need. We just need to rely and focus a lot more on one another rather than always thinking that our first point of call must be the developed world or China. There's a lot more that we can do for ourselves inside Africa.
I love it. Um, One last question before we close off. Um, if there's one thing you change about the financial system in South Africa, what would it be?
Yo, that's there are so many possible things here, but I think I want to go back to one of, and Warren Buffett has got many famous quotes, but one of his famous quotes that I really like about what Warren Buffett said is, investments should be bought, not sold. We have an investment industry that relies on brokers, advisors, planners, and so on, selling products to investors in order to earn a commission for that. And that most often is not in the best interest of the client. It's in the interest of the broker or the person that sold the product. I much rather want to see that investments be bought, not sold. Now, why would I buy an investment as an individual? I would buy it when I understand enough what it is and what it can do for me in my life. So that brings it back to the education idea, the financial literacy idea, the idea that people should be empowered with knowledge and understanding to enable them to buy investments, not be sort of the price taker that sits back and wait for something to be sold to them. But the dilemma that we have in South Africa is twofold. The one is that we actually don't have enough, let's call it adults, teachers, parents, who know enough about investments themselves that they can educate the next generation. So, who's supposed to teach people how to invest if even the adults in the room don't have the knowledge to do so? And with that, then also comes, so who does the supposed financial literacy training in South Africa? Well, it's often exactly the financial services providers who have it in their interest to sell you products. So what they teach you about investing and what they teach you about money management and so on relies very heavily on their desired outcome, which is for you to buy one of their products, whether that product is investments or whether it is insurance or whether it is a policy of some sort. So I really look towards the power of technology and what the virtual world can bring to us in terms of really spreading the word around financial literacy by making use of technology. I think back of years ago when William Smith, who was this wonderful maths teacher, he was teaching maths to kids around South Africa, everywhere, on TV. If you had access to SABC TV, which was a free TV service, but if you had access to that, you could actually sit in the classroom, so to speak, of William Smith. And to this day, I think there are so many people who give him credit for really opening up their eyes and their minds to mathematics and being able to do that. Now, we have the same opportunity to do that with investments, financial literacy. And I really would love to see an initiative where we use technology to reach everybody into the furthest corners of this country, and that they are presented with content that will empower them with knowledge to allow them to buy and invest where they know it works for their objectives, rather than because somebody sold them a product, a policy, an insurance-based thing of some sort. So, yeah, if you force me to say just one thing, that would be my dream. That would be the one thing that I would love to change in South Africa.